might have to take notes on this bitch. All right, Famous and Wealthy Podcast, man. Today we got my boy Wanzo in the building right now. He gonna break down student loans. He gonna break down credit repair, funding, everything it is to know about business funding, business credit, and everything, man. What's going on, my boy?
What's up, bro? Thank you for having me on.
Yes, sir. Hey, so break down a little bit about who is Wanzo?
I'm originally from Cleveland, Ohio. My name is Andre Wanzo, and my background is originally in technology field. I used to be an engineer, architect, and then I retired as an enterprise architect.
Right.
I embarked into the financial field because I was struggling with finances and tied to Cleveland, Ohio.
Right.
So once I got to Atlanta, I embarked upon a group that kind of showed me a little bit different about finances and how to actually utilize credit in a very heavy way. And once I understood how credit was able to be utilized, I went to a whole nother level with it.
Wow.
I was making a lot of money doing technology, right?
Yeah.
But then I found a way to actually make money, the same amount of money I was making in a year, I could make within a month when I moved into this particular space. So that's my background.
So as far as like business funding, what made you actually jump into business funding?
Well, I was always curious on how people or companies actually access financing or funding to actually get their company to grow. And so I took out the time to investigate it. And once I actually got into a mentor who helped me digest the information and put me in direction to be able to utilize it in the right way, it took me to a whole nother level of the game. And I really wanted to understand business funding because I wanted to access the money so I could help a company grow, in addition to helping other people grow as well.
So I noticed that a lot of guys that's out here that do business funding, and I know you got a mentorship program, right? Mm-hmm. How many students and, what usually you charge for mentorship?
Right now I charge anywhere from 15 to something like 20,000, depending on what they want to learn. Right. Because I give them the opportunity to learn the credit space, the funding space, in addition to how to invest out in the real estate without putting their personal business name. So you can own a full portfolio without showing any debt.
Fire. So like what I do notice is like, as far as if somebody want to pay you, let's say if I got 10,000, 20,000, 30,000, I want to invest with you, right? I noticed that a lot of mentees, they keep, the sauce away. What I mean by that is, let's say if I pay you and I say, man, I want to learn how to do the funding game myself. Would you be willing to teach people that?
Absolutely. That's what I actually do inside of my actual mentorship, right? Okay. The whole objective is for you to become me.
Right.
Right? So what I know, you would know. Right? And then you take out the time to actually implement your own strategies and structures that I've already taught you as well. And that could try to make yours a little different than the things I taught you. But it help elevate you in a whole nother direction. Yeah. There's a lot of things that people in the funding space, they don't really utilize, right? A lot of the funders want to use what you call a blueprint. I'm not a blueprint type of person. I'm a situational person, meaning that I listen to you, I understand you, I help understand and digest what you're trying to do. I understand where you at, where you want to go, and understand what it's going to take in order to put you there and get you there. Right. So that's why strategy comes into place versus just a blueprint. Because a blueprint is, think about it, a blueprint is a set of instructions. Right. If I gave 5 people the same blueprint and it works for one, what the other 4 is supposed to do? They have no clue. And the only way to overcome that is to actually take out the time to understand how things work. Right. Digest, get information that can help be beneficial to you. That's the only way to do it, right? Yeah. So you have to take out the time to understand how things work. And I always tell people, in order to get something done, in order to defeat something, you have to know how it works, right? You have to know how it works. So I take out the time to understand what underwriters are looking for. Take out the time to understand what type of paperwork they require. I understand what they're actually looking for to get me in position to get me qualified for the money that I need and the students that what they need. Right.
So normally what do their credit score have to be to actually get the big amounts of money or even the small amounts?
Well, let's keep in mind that credit score it's not really the key, right? It's what's in the credit profile itself. The credit profile at least needs to have over 6 major accounts on there. And I'm going to say primary accounts because those primary accounts show you that it tells the underwriter all about your payment history and how you respect your relationships. Right. That's the biggest part when it comes to credit. Credit is nothing but a financial report card for people to look at and see how you manage money. That's all it is. And once you've shown how you know how to manage money, then people want to give you more money because banks are not into holding on to money. They're into giving it out. That's what the lending practice is.
Oh, that is kind of crazy how that. So, okay, let's say if I'm a person that's watching right now I had zero credit. I have no money.
Okay.
How would you explain for them to get into a position to actually, start from somewhere to get funding?
Well, I mean, everything's going to start with education, right?
Yeah.
That's why I said in order to feed something, you got to know how it works, right? So we need to understand where we at and what we're going to need to get there. So what are you trying to get? That'll be the question, right?
Right.
Where are you trying to go? So we can't plan out something and we don't know where we're going. You want to go on a trip, you got to say, I want to go to Africa, right? And then you got to figure out how to get there, right? So we have to take out the time to digest the information that's required and needed. For example, if somebody wanted funding, right? Let's think about this, because I've had plenty of people to actually go to a bank that has good credit, like you said, right? And they couldn't even get the actual funding that they wanted and required. You know why? Because they had the wrong conversation. So let me dive into it for you. You got what you call products when it comes to a bank, right? Those products can be a credit card, a line of credit, or a loan. Now, which one of those fall in line for what you're trying to do? Because you can have great credit in the wrong conversation and you still get denied. Prime example, if you was building out an establishment, right, and you went to the bank and you said, hey, I need $300,000 to get this build out completed for a new building, right, and you ask them for a line of credit, well, they're going to instantly deny you. You know why? Because a loan is designed for long-term use, and that building's going to take some time to get completed. A line of credit is designed for short-term use. So you picked out the wrong product for the wrong actual project, and they denied you based upon your conversation, not because of your profile.
Yeah.
Make sense?
Yeah. Get it. So what experiences shaped your financial situations early on?
Not understanding how to actually manage money, what to do with money once I got it, the struggle with understanding why every time I went to the bank I got denied. So, you had to take, if you see something that's failing for you, you need to take out the time to understand how to resolve it and fix it. So I took out the time to actually understand credit on a whole nother level. I understood what it was for. I understood why people ask you for credit. I understood what it meant. And I also understood what banks are looking for, right?
Yeah.
Again, banks are lending institutions. So if they're not lending out money, they're out of business.
Right.
And right now, banks are tightening up on lending out money. Have you ever heard of what you call a quantitative tightening?
No.
We got quantitative tightening and quantitative easing, right? So what that is that quantitative tightening is when the actual banks and the Federal Reserves start to tighten up on how much money is in the economy because of inflation, right? So what they try to do is limit the amount of money that's out there because it's too many products that's at a high amount, which they shouldn't be that way. Like think about the houses and when COVID was going on, right? So you had all these houses, all these people look for houses, right? But you didn't have enough houses. So the banks were overflowed with applications when it came to buying a house. They got overwhelmed. So it's to supply and demand. So what happens is if you got a limited amount of supply, what happens? Demand. If you got a limited amount of supply and you got a high demand, what happens? The price goes up, right? So in order to defeat that, you have to remove some of the money that's out there so people can stop requesting some of the things that's at a high price, if that makes sense, right? So that's what quantitative tightening is, to try to slow down the actual demand of what's going on. Quantitative easing is what they just did right now, is when they actually put more money into the economy. And they're putting money into the economy right now based upon the fact that you see a lot of businesses failing. If a lot of businesses start to fail, then that's a snowball effect to everything else. Just think about it. If you work for a company, right, and you're an employee, well, you have bills, right? And if you have bills, you need to get paid in order to take care of your bills. Everything is in a circle.
Right.
When you pay me, I pay George, George pay Sam, Sam pay Harry. Make sense? So if you can't get paid, then everything else below you starts to default. And when you start to default, it's a snowball effect. You can't pay your car note, you can't pay your mortgage, you can't pay any of your bills. So whatever companies that you owe money to can't pay their bills. So it's important for the government to actually put money back into the economy to keep the economy rolling.
Right.
That make sense?
Yeah.
Okay.
So how did your background in information technology influence, your approach for funding?
Well, because dealing with technology made me more logical thinker. So I put things in sequence. And that's why I'm able to actually access over $300,000 in business funding with just one inquiry on my credit report, because you got to understand strategy and structure. So the technology side helped develop my way of thinking to anything, right? Everything has to make sense. So when I got into business funding, I learned and understood what could be beneficial to me with the less amount of negative impact. For example, think about if you can get $100,000 with no inquiries on your credit report. Mm-hmm. None, right? So if I got you $100,000 with no inquiries on your credit report, but then if I was able to get you another $300,000 with just one inquiry on your credit report, that's $400,000 right there, right? Mm-hmm. So when we sit here and we try to figure out which path should I take in order to get the maximum amount of funding that's possible based upon my situation and what I'm looking to do, we have to add strategy to that. It's just not a blueprint. I was able to acquire, over $1 million with less than 10 inquiries on my credit report.
Damn.
With less than 10. Because of the strategy and structure and the patience that I had.
Right. So what made you go from understanding systems to actually mastering financial systems?
Well, I know that systems for sure is more beneficial to you in more ways than one, because it helps you be more effective and efficient, right? And a lot of times systems run 7x24, right? Where you might utilize a human to do certain things. You can just utilize systems to replace them. That's why we utilize automation for a lot of things as well, like answering our DMs, responding to our emails, even answering the phone with your voice, although it's not really you, right? So understanding how to use those systems and how it can actually impact your bottom line is very beneficial. Just think about AI itself saves companies anywhere from $3,000 to $5,000 or more a month because of elimination of human interaction.
Mm-hmm. So what was your big funding win, that changed everything for you?
Well, to be honest with you, my big funding win is when I first started actually getting into funding and seeing that it can actually be done.
Right.
So I was able to generate $100,000 or get access to $100,000 in one night. And from that point moving forward, I started to get access to more than just $100,000. I started getting access to $500,000, $600,000. And I'm talking about in a very short amount of time. When I got into business funding, I was able to acquire that $1 million less than 3 months. Only because of the strategy structure that I put in place. Now, you think about if you got 3 companies and you rinse and repeat the same process, that's $3 million, right? If you only had 4 inquiries or 3 to 4 inquiries on your credit report, at the max, you're looking at 12 with $3 million. That's the difference between a blueprint and strategy. Let me give you another example between blueprint and strategy. I had a couple. It was a married couple. They came to me for business funding. So the husband himself had good credit. However, he did have a ding on the business side. So when I went to give him, set him up for business credit, they said, no, he has a late payment on business credit. I said, so we can't move forward with you. So what about your wife? What does she have? How's her credit? He said, her credit is great. I said, all right, well, let's see if we can actually get her funding. Does she have a company? He said, yeah, she had a company. Unfortunately, the company was only around for 6 months. Most banks and financial institutions require you to be there for 12 months. They want what you call a trend line. They want to look at the ups and downs, the peaks and the valleys of how you've been doing with your finances, right? Mm-hmm. So I said, she got great credit, but she doesn't fall within the guidelines of what the bank is looking for. So this is when the creativity comes into place. I said, well, do you have a business, right? I'm talking to the wife. She said, yes. I said, well, do you have those business transactions going to your personal account? She said, yes. I said, can you give me 6 months of those bank statements? She said, yes. I took those bank statements. I took those bank statements. We provided them to the underwriter for his review. And what I explained to the underwriter is that she's already been in business. She just got registered with the state this year. So the business that she's in, she's been very successful in that business that she's in. She just wasn't registered with the state for the period of time. The underwriters took the actual bank statements in consideration and gave her $160,000 in funding. Damn. Now that's not a blueprint. Now how do you do that? It's with strategy and structure. It's with understanding what underwriters are willing to accept, what they're not willing to accept. This is why you can't just look at a set of instructions, because if somebody gives you a set of instructions, then if it doesn't work for you, what are you supposed to do?
So is that what you was meaning by you saying that strategy beats blueprint?
Exactly. Because when you look at a strategy, you're trying to understand how to think. And if this particular process doesn't work for you, how you figure it out? How do you pivot? What are you supposed to do? If you don't figure out what to do, you're going to be stuck. And the only way to figure out what to do is to educate your mind on how things work. Think about this. So you take your car to a mechanic, right? Mm-hmm. And you're like, hey, my car doesn't work. Okay? Mm-hmm. Mechanic says, well, what's wrong with it? You said don't start. Okay. He's like, don't start. All right. So what do you think he's going to look at? The first thing he's going to look at are the components that actually start the car. He's going to look at the battery. He's going to look at the starter. He's going to look at the ignition and even the fuel pump. So you ask yourself, why is he not looking at the muffler? Why is he not looking at the brakes? Why is he not looking at the steering wheel? Why? Because they're not the components that start the car. My point with saying that is that if you want to start business funding, if you want to start in credit, you have to know where to start, right? And if you start in the wrong place, you'll end up with the wrong results. And that's what a lot of people do.
So why do you think most entrepreneurs fail, especially when it comes to accessing funding?
Because they don't know where to start. I used to be one of those people until I educated my mind. They just don't know where to go, right? We all need a path. We all need somewhere to actually show us how it's supposed to start, where we're supposed to go, how we're supposed to do it, who we're supposed to do it with, when we're supposed to do it. All those are like journalistic questions. If they answer those, who, what, when, where, and how, if they answer those questions right there, then they'll already be halfway to success of what they're trying to do. Think about if you don't know who to go to and what to go to them for, what are you going to do? I have mentees right now. They said, hey, I don't need your help with the business funding. I got it. Okay, go ahead. Let me see what you got. A girl said, somebody told me what to put on the Chase application. Okay, what was it? How did it work out for you? How much money did you get? She said, I got $3,000. Oh, when I got people anywhere from $50,000 to $80,000 with one inquiry on a credit report and you got $3,000? Sound like to me you're confused and you ain't know where to start. And you took wrong information. So that's why it's key to understanding like who you listening to and why you're listening to them.
What's the biggest misconception about business credit?
The biggest misconception about business credit is the fact that people don't believe that if you put things on your business credit that financial institutions can actually see still your debt to ratio income and your high utilization.
Oh, shoot.
Yeah. So think about this. A lot of people say, I don't want it on my personal credit. I'm going to put it on my business credit. Well, that's fine. But you need to understand who monitors your business credit, right? Everybody wants to look at like Dun & Bradstreet, right? Okay, Dun & Bradstreet, keep in mind that all companies don't report to Dun & Bradstreet, right? Companies that report to like Experian business credit, Equifax business credit. I believe TransUnion just came out with a business credit monitoring system. But the biggest one is the Small Financial Business Exchange. Most of the financial institutions go to that. You're talking about all the major banks, a lot of the credit unions. They utilize that because it shows all your information. And what's in there? It's the number of credit cards you have, the loans, the lines of credit, everything that you have. So if you have 4 credit cards in there on the business side and they're maxed out, they're going to tell you they're maxed out. And they're not going to actually award you any more funding because you have credit cards that's maxed out. And people don't understand that. So right now, even the SBA is actually utilizing a system where they actually where they take your personal credit and your business credit and put it together and actually rate you off of that and see if you actually qualify for an SBA loan.
Right.
So people need to be careful and understand that just because you put something on the business side doesn't mean that they can't see it. They look at that too as well. Because again, they want to see how are you actually managing credit on the personal and the business side, and understand what your risk could possibly be if you're coming in for funding.
What does structure before funding means?
Well, okay. You have entities, right? You have like a LLC, which is most commonly used. That's what everybody's go for, right? Yeah. Liability corporation, right? But you also have other entities, right? You have a S corp, you have a corporation. Mm-hmm. You know, what are those other entities for? The other entities are not there for nothing. So what is the benefit of having each one, and which one is applicable to you for what you're looking to do? For example, a LLC, Limit Liability Corporation. So a lot of people get an LLC because it says, hey, it protects me against what you call, any type of lawsuits. That's what an LLC is, right? It protects you, your personal, from your business. If anything happens on your business side, then you can't sue the person for their personal stuff. Okay? Mm-hmm. Only problem with that, they got what you call piercing the corporate veil. So it doesn't actually protect you if somebody pierces the corporate veil, because then that means they can go after your personal items as well. Your house, your car, your bank account, whatever you own. So that's an LLC, right? Mm-hmm. Then you got an S corp. So what's the benefit of an S corp? Well, S corp is what you call a pass-through. Right. What does that mean? It means that whatever losses you may have took on your actual business, that you can pass them down to your personal. So if you took a $20,000 loss on your business side, you could pass that $20,000 loss down to your personal. And if you owed $100,000 in taxes, now you're only going to be taxed at $80,000 because the $20,000 was a takeaway.
Damn.
And then you got an LLP.
Right.
What is an LLP? People don't even look at this stuff. An LLP is Limited Liability Partnership. Mm. So me and you were in business, and we had two other guys. There's four of us, right? This is what a lot of doctors use. And one of the doctors got sued. An LLP is Limited Liability Partnership because it isolates each one of you guys from any type of potential lawsuit that one person might have done in the group. Mm. People don't look at that, right? And then you got a corporation. What's a corporation for? Corporation, most of the time, is for you the ability to give you to grow a fund, right?
Yeah.
That means that you can actually go get stock and go actually request money, right? So when you go request money, people put money in the stocks, and then your companies actually have access to revenue.
Yeah.
So that's the major difference, right? So you got to have to make sure what you're looking for is structured for what you're trying to do. Because a lot of people just go out the LLC, and that might not be the right structure for you.
Right. Why is understanding how the system works more powerful than just following steps?
Well, I mean, if you kind of think about what I said earlier, right? In order to defeat something, you got to know how it works. And that's the difference between a blueprint and strategy. Because the strategy, again, is understanding the dynamics of how it works, the functionality of how it works, right? How does an underwriter think? What is an underwriter looking for? Those are the key things, right? Who's the decision maker? The underwriter is the decision maker, right? So what is he actually looking for? I tell people, if you know what they're looking for, give it to them.
Right.
How simple is that? If you know what they're looking for, give it to them. If you know they're looking for 2 years of business taxes at a certain revenue, if you know they're looking for a balance sheet, people need to understand what that is. You know they're looking for a debt schedule, need to know what that is. A financial statement, need to know what that is. There's key paperwork that needs to be in place for you to get the maximum amount of funding when you're looking to do something without the so-called no docs, right? Everybody want to do the no docs, but what about if you actually learn with the documentation that can utilize to take you to the whole nother level of the game, and make that applicable to the no doc situation? Now you got a ton of access to funding. Does that make sense?
Yeah. So as far as like people that don't understand what no docs mean, can you break that down a little bit?
Basically, no docs mean that you have the ability to request funding from a financial institution without providing any bank statements, without providing a personal financial statement, without providing a debt schedule, a P&L, which is profit and loss. 2 years of personal taxes, 2 years of business taxes, things of that nature. That's what a no-doc program is.
Okay.
And many of the financial institutions now was offering that. Some of them are making it tougher now because they're taking a lot of defaults. And people need to know, because they're taking a lot of defaults, that banks are tightening up on the way they do lending.
Right.
So the way that you're going to actually be able to get money nowadays is that you got to make sure that you're in position to be acceptable to the banks. You got to make your profile sexy, right? Because, again, they can't stop giving out money. If they stop giving out money, then they're out of business.
Exactly. How have fintech banks changed the funding landscape?
Well, let's understand what a fintech bank is. A fintech bank is a financial institution that doesn't have a physical structure. It's online only. And a lot of fintech banks, just to let you know, don't actually do a hard inquiry on your credit report. So when I was talking about actually being able to access money and maximize the ability to do it, this is one of the strategies I'm talking about. So what if I took a fintech bank, like, I'll give you one, SoFi. SoFi offered me $95,700, right? No inquiries, right? So think about what I said about being able to access another $300,000 with one inquiry, right? That's a total of $400,000 right there. Adding them together with the fintech banks. Now, SoFi is just one fintech bank. There's plenty of other banks that's going to actually give you funding without any type of hard inquiries, like Cap on Tap is a fintech bank. They gave me $45,000,
right,
with no hard inquiries.
So Capital on Tap gave you $45,000.
Cap on Tap gave me $45,000, and you add that into the $100,000 that almost 95,000. What was it? 97,500 that SoFi offered.
Yeah.
And then the actual $300,000 play that you can do.
So what does it take to legitimately access $100K in business funding?
A great credit profile. Many of clients don't have any business profile, so they have to go off your personal. Of course, you're going to have to sign as a PG. PG stands for personal guarantor, meaning that if you default on the business side, that then they will actually come for you on the personal side. So you want to be cautious about what you're doing when you're actually applying for funding. And one of the banks that you want to be careful with is Chase when it comes to business funding, because if you was to acquire, like, say, put a car in your business name with Chase is actually going to put that car on your personal. It's going to report it to your personal side and the business side, which defeat the purpose of even putting it in your business in the first place.
Oh, never knew that.
Yeah. So you got to be cautious of that. And I think Capital One does that as well.
How do you protect yourself, with your personal credit while scaling?
Well, you want to make sure you always give your monitoring system, right? If anything was to happen to your personal credit, you would get alerts. So you want to set up something like with Experian.com. They also have alerts that on there that you can enable in order to tell you any type of modifications that may be going on to your credit at any point in time, 7/24. So if you got a no inquiry and you didn't inquire and then you didn't apply for anything, then you need to know to look into that, and somebody may have access to your actual profile that's utilizing it the wrong way.
Right.
So you want to always monitor your credit. Most people don't want to pay for a monitoring system every month, unfortunately, but it's been very beneficial. I probably paid a couple of $1,000 in monitor systems throughout the course of me being into this.
What are some common mistakes that entrepreneurs make when they're trying to apply for funding?
Some of the common mistakes is actually going to the wrong institutions for the wrong things. So let's talk about it, right? So you have some banks that are more auto friendly. You have banks that's more real estate friendly. You have banks that's just they give you equipment loans, right?
And in your mentorship, you teach all this.
In my mentorship, I teach you the strategy and structure of what you need to put you in position for what you're trying to get. Right. So think about it, right? When I said the actual equipment loan, right, I mean, banks actually offer an equipment loan. And what are the odds of you actually getting the money that you're looking for if you go to the bank that specializes in what you're trying to do? Bank of America, for example. Bank of America used to give out at least 3-4 car loans for one individual. 3-4.
Yeah, yep, they did.
Right?
Yep.
So now if you went to them for an equipment loan, the odds of you getting that are very slim. But what if I gave you a credit union that their main priority is to provide you equipment loans? You You get what I'm saying?
Yeah.
So that's why the strategy and structure is key. Know where to go, who to go to, why to go, when to go, and then how to actually get the actual product that you're looking for. That's what I teach within my mentorship.
Fire.
That's what strategy and structure is. Understanding how to position yourself to make it make sense, not just to you, but for the people that's actually going to fund you or give you the financing that you're looking for.
Right. So, as far as what separates fundable businesses from risky ones?
Well, you want to make sure whenever you're doing business funding, banks have what you call red flags for certain industries. Towing, anything with trucking, anything that deal with financing. So if you say you're a finance company, they're not going to do that. Anything that's dealing with like cigarettes, gambling, any of those things you want to be mindful of before you actually go for funding. You want to do your research. Even if you are in those fields, it's a way around it, but you have to understand how to have that conversation to a bank. For example, say if I was doing trucking, right? We know trucking is a red flag. And they say, well, we don't really deal with trucking, people that's into the trucking business. Well, let them know that you don't own the trucks. You're not in the trucking business, but you teach people how to actually run a trucking business. See the difference? Mm-hmm. Now you're not in that business, but you're educating people on how to run that business. So you're in the education field in the sector when it comes to like a SIC code. You know, that's the code that they look up when they're trying to understand what industry is your company in. So if you use more educational than the actual company, what the company's actually doing, a lot of times that's a way that a bank will reevaluate your situation and approve you if you're in position to get it.
What is a business purpose loan?
Oof, now you're getting deep. So a business purpose loan. So a business purpose loan is mostly a hedge fund, right? And when you're using private money, what people don't understand is that there's no regulations to that. Banks are regulated. So why is a business purpose loan important? Because for one, when you're using a business purpose loan, it's only for business. It's not for personal. So you can't not even put the money or whatever you're trying to do into your personal name because it's called a business purpose loan, right?
Yep.
So there are no regulations to that, and business purpose loans don't pull your credit. They can do a soft pull just to see what you're doing. They don't put any hard inquiries on your credit report. So now you got the opportunity to actually access money to fund your business without showing any debt as well, because it doesn't report to your credit report. Right. It's for business purpose loan. Right. So you don't see any type of debt to ratio income. So just think about if you had 10 houses and you did all of them with a business purpose loan. Each one of those houses was worth, $200,000 a piece, right? So you did a portfolio of like $1 million, 5 houses, right? But it doesn't show any type of debt to ratio income, which is beneficial to you getting any additional money from banks and financial institutions because it doesn't show that you're in debt for anything. But you have a whole bunch of debt that they can't see.
Right.
That's what a business purpose loan is. It can help you, elevate you in silence.
Right. How can you acquire property without putting it into your personal name or a business name?
Well, that's what you call like subject to. So basically what happens is this. Whenever you walk into a financial institution and you go acquire a mortgage, the original person that acquired that mortgage, their signature has their signature on the mortgage documents. Right? Mm-hmm. So that means that you're signing a legal binding agreement with that particular financial institution.
Right.
All right. So say, for example, you had the house for about 4 years.
Right.
You run into some financial difficulties and you want to get rid of the house. Well, you have the ability to sell the house because you have what you call 2 deeds when it comes to a house. You have a warranty deed and you have a security deed.
Right.
Security deed goes with the actual financial institution, whoever that may be. The warranty deed is your deed saying that you actually own the house. Now, because you have the warranty deed, you also have the ability to sell the house, which you call a quitclaim deed. A quitclaim deed will give me the opportunity to take over your mortgage payments and own the house. And the bank itself, or the financial institution itself, is no more than the first lien holder on the actual property. They don't own it. They're just a lien holder. So, because I did not sign the original mortgage documents, someone else did. They are responsible legally for making the payments to that particular bank. Got it? So now your name is not on the hook because you don't have any debt with this bank, the original buyer do. However, you own the property through a quitclaim deed because they sold you the property without letting the bank know. A lot of times you don't want to let the bank know because they'll call the deed in on you. And what that means is that if the house has a $300,000 debt on it in the bank and you owe the bank, they want the whole $300,000 right then and there in a short amount of time. So that's how you can acquire a house or any property without putting your personal business name, by doing what you call a subject to. And all that is saying, hey, I'm the second person that's going to own this house. I'm going to take it out the property possession of the first person, and I'm going to own it through a quitclaim deed. Now, you're responsible for paying on the house, right? What are the benefits of that? Because now you can have all types of properties that you own without any debt, but you got residual income coming in every single month. So if you had a house and the mortgage was, I don't know, $1,000 a month, but you rent it out for $3,500 a month, you get what I'm saying? That's a $2,500 profit every single month, and you show no debt. Now, if in fact you chose to actually walk away from this house at any point in time, no one's coming after you.
Fire.
Because your name is not on the contract. And it's very important that people understand that. So that's how people are able to actually acquire a abundant amount of properties without showing any amount of debt and have a large amount of residual income coming in every single month. A lot of times you find these properties based upon people's financial struggles. People about to go into foreclosure. People are moving. They inherit these properties. We get a lot of our properties from what you call bird dogs, things of that nature, because people go to them to have to actually get them in position to sell their house or get rid of the house.
Right. Why did you create the Wanzo Way?
Because I was tired of all the crap that people was doing, that everything was just a blueprint, right? So you think about it, the Wanzo Way is really designed to understand really strategy and structure. That is the main purpose, which I described earlier. The strategy piece is learning how to think and learning how to utilize information to maximize your ability to do whatever you want to do, right? That's why I learned so much about banks. Understanding, like, you got regional banks, you got national banks, and you got community banks, right? All those banks do something different. First of all, a community bank only is going to work within the community. That's what it's there for. A regional bank is going to work for a certain part of the region, right? And a national bank is going to work all the way across the United States. So what bank falls in line for what you're trying to do and where you're trying to do it at? A lot of people want to use like Truist because they're one of the best banks to go to.
Right.
But West Coast people are not in position to use Truist. So now what are you going to do? And that's why it's important to understand what banks can do for you, where they at, and based upon what you're trying to do. Because some of us was getting funding and not paying the bill and messing up with the banks. Well, how many national banks you think there actually are in the United States? So if you mess up your relationship with these banks, you know, who will you have to go to on a national level? Mm-hmm. And if you go to a regional bank, well, you don't live in that region. And you damn sure don't live in that community.
Right. For sure. That's wild. Why do you believe buying a business is better than starting a business?
Well, I mean, think about it, right? When you have to start a business, think about the complete process that you have to go through. You have to understand what business structure that we're going to need, right? The LLC, the S Corp, things of that nature, right? You got to get the EIN number. You have to start a business bank account, right? You have to get a business name. Depending on what type of business it is, you have to find a physical location if it's like a restaurant, right? You have to get permits. You have to find employees. You have to get, if it's a restaurant, a menu. It's a lot of different things that you have to get in order to get that business up and going. Now, what if you just was able to walk into a turnkey business that had all that already with cash flow that somebody doesn't want anymore because they old or they retired or they just want to sell and get out the business? Everything is already right there established. The only thing that you need to do is go in and put your actual business mentality to it, right? Your management skills, or how you're going to actually help it elevate to the next level of the game. That saves you a lot of time, a lot of effort. And not only that, you can actually look at what you call the trend line, so you can see what type of revenue this business was generating before you even got it. It already got employees and it's generating revenue. So that is the benefit of acquiring a business acquiring a business rather than starting one.
What financial metrics matters most before acquiring a company?
Understanding what it's actually doing, understanding the pitfalls that the actual company has, where they at today. Because when you look at acquiring a business, you want to look at 3 years of their finances. That's what you do. And you want to see the consistency of that, right? Because if in fact they're not doing well for at least 3 years in a steady rate, then you have to be concerned about why not? What was their challenges? And if I want to take that on. See, when a business is doing well, and depending on what type of business it is, every business could be sold for 3 times or more than what it's actually worth. It's called a multiplexer. And what you do is you look at a multiplexer and you see, what type of business am I in? All right, if I looked into the multiplexer, if my business was making this amount of money, what could I sell it for? That's what most businesses use when they're selling their business and when people are acquiring business, how much they should buy it for.
Why is financial literacy still lacking in our community?
Well, because one is it's not taught in our schools. We never taught the importance of financial literacy. We taught things like who discovered America, like Columbus. Who cares about that? Tell me who discovered these banks. Tell me who put the banks together. Tell me what banks are. Like I just described to you about the community banks, the regional banks, the national banks. What are the different products that these banks have and why? How can I utilize them? How can I get access to them? Think about this, Kevin. Do you actually know who owns the Federal Reserve? You know what the Federal Reserve is, right? Mm-hmm. So the Federal Reserve is a private entity. They're private. People think they're government. They're private, right? And they actually create money. And they put that money back into the economy to let it circulate, right? But when that money goes out to the economy, do you understand that the people that own the Federal Reserve gets a 6% return on the money that they put out? Well, guess who owns the Federal Reserve? Major banks. Wow. Citibank, Chase Bank, Wells Fargo. You don't believe me? Look it up. Damn. They own these banks. So the same people that you giving your money to so they can lend it out to everybody else are the same people that's earning their interest on the back end again. Not on the front end, but on the back end when it circulates back to them. Think about this, right? Money's created out of thin air. There's nothing that's backing money at all. It used to be gold. In 1969, 71, that was removed. Now money's backed by nothing, right? So now since it's backed by nothing, that means that we can create all the money we want, right? We can create all the money we want, as much as we want, and put it back into the economy. And once we put it back into the economy, it's going to flow right back to its original state, which was the Federal Reserve Bank. Right? So banks are set up not to fail. You know, they say this bank is too big to fail, but we can let this bank fail. You know why? Because that bank that failed is not part of the Federal Reserve. Right. How can a bank be too big to fail? Because they're the ones that's actually generating the money on the back end, sticking out here into the economy. See, this is what I'm talking about when I say the Wanzo Way and why I created it. Understand how things work. And in order to defeat something, you have to know how it works, right? So if you know where money comes from, what it's really used for, and why we need to position ourselves in the best way to maximize the amount of money that we got, is understanding why it's in existence. People put money into the banking system, and they put it into their account. Now, you can either stack money, or you can have what you call a cash flow for money. If you stack money, you'll get a small percent, 2-3% interest every year on your money that you stack, versus taking your money and investing into real estate or some other financial vehicle to help it grow, right? They don't get that. They let it sit there. But money's also called a currency. Well, what does current do in water? It moves. It don't sit there. So your money's not designed to move. It's not designed to sit. It's designed to move. So why are you letting it sit there? Banks ain't sitting on money. They're looking for you. They're looking for me to give it to. Why? Because they can't make no money with the money sitting there. It's a currency. That's why it's called a current. Have you ever got mail that says, hey, You're qualified for this loan or this credit card or this line of credit. They're fishing for you. They just want to fish for the right people. That's all that is. They don't want the money. If anybody out there can hear me, understand banks do not want money. They want you to have the money so they can make money with you, right? That's why they become your financial partner. So don't never think the bank don't want to give you money. They just trying to qualify people to give it to. And that's what you learn within my mentorship, how to qualify, how to get in a position, right? And what banks are the ones that give you money based upon what you're trying to do. That makes sense?
Yeah. Give us a little game about how you can remove student loans.
Oh, student loans is one of the biggest impacts on people's credit report right now because it harms your debt to ratio income.
Yeah.
Right? Some people have hundreds and hundreds of thousands of dollars in student loans.
Right.
I got rid of my student loans. I got rid of a couple of people that had $100,000 student loans. And understand this. Whenever you're dealing with credit, ever, you always have to prove what's on there is factual. It's got to be factual with proof, right? So it doesn't have to be 95% true. It doesn't have to be 99% true. It has to be 100% true, right? So whenever you get into an agreement, a contractual binding agreement with somebody, you have two parties involved. And that one sheet of paper identifies the agreement and what two parties that might be. If you take out the time to ask a financial institution or whomever may have financed your student loans for what you call a promissory note. The promissory note is the actual agreement between you and that financial institution that funded your education. Many a times, they're not going to have that. That's the agreement. So if I said, Kevo, I owe you $50,000 for my student loans. Thank you for funding my education. But before I pay you, can you please just provide me that promissory note we had an agreement on? And you don't provide it, how do I owe you anything? Where's the proof? If people ask for their promissory note from any student loan provider, I promise you, what they're going to do is say, hey, you know what? We're going to pause your student loans for about 2 years. And then we'll reestablish them within that 2-year span. Why? Because what you're requesting, they don't have. If I had a cup of water, I had a pitcher with a cup of water, and I'm pouring that water into that glass, eventually that water is going to what? Overflow. Start running down the glass. And at some point, you got to pour all the water out the glass. Right? The same thing happens with data. See, before we was in the electronic digital age, they had what you call paper mills. And a paper mill was a warehouse full of these promissory notes, agreements that people had that set into a warehouse. And if you wanted to argue with something I'm saying right now, you would actually go into that warehouse, find that promissory note, and say, here's our agreement right here. Well, that's gone. That's destroyed. They don't do that anymore. But now what they do is they take the information and they put it into a database. Well, just like anything else, everything's going to fill up at some point in time. So when the database fills up, what you think they do? They purge the information. So if you purge the information, what are the odds of you having my promissory note? So people that have 5-year, 10-year, 15-year, 20-year student loans, what are the odds of them having that promissory note? Do you know how many student loan service providers have exchanged information within the last 10 years? What are the odds of that information getting lost? It's very high.
Right.
And they're not going to have it. I'll tell you that I actually was helping someone remove their student loans. I said, can you please provide a promissory note? No, they did. They provided a promissory note with falsified information on there. I'll make it even better for you. It was me. All right? So I asked for my promissory note, and when I looked on there, the references that I had on there, you know how they ask for a reference? They said, well, give us some references of who we can talk to, and just in case we need to find you. Okay, do that. But when I looked on the actual promissory note I requested, you won't believe who they had on there as a reference. My daughter. She was a child, bro. She was a child. How can you have her on there as a reference? There's no way I'm going to put her on there. Guess who else they had on there as a reference? Myself. You know what a reference is? A reference is a third party. How can I reference myself? They also had the wrong zip code, the wrong address. It was modified. Telling you a true story. If you don't have the original promissory note, you don't have a debt. But it's a process, and you have to learn that process. And that's one of the things I could teach within my mentorship. That's why my mentorship is very exciting and teaches you different things, right?
Yeah.
Because it's not very many people that know about that. They put you into a payment plan with the student loan providers.
Yeah.
But they're not telling you how to get rid of that debt.
Right. That's fire. That's super fire. I ain't gonna lie. Where if somebody is interested into signing up for your mentorship program, where would they go?
TheWanzoWay.com. So that's TheWanzoway.com. I'm Andre Wanzo. There's only one way to do it. It's the Wanzo Way. That's the only way.
Yes, sir. So what's up with the collection stuff you was telling me about?
You know, a lot of people struggle with collections. Do you know none of my actual clients have ever paid a collection? I've never paid a collection.
Yeah.
Going back to contracts, right? Collections are easy to get rid of because you don't actually own a collector anything, right? The debt collector.
Yeah.
A lot of people don't understand that when debt is transferred to a collector, the information that they receive is nothing more than your information that verify you. What that is, that's your name, your social security number, your date of birth, your phone number, your address. That's it. That says this is Andre Wanzo, that's Kevo, right?
Right.
That's all that is. But it doesn't actually have any qualifying documentation that actually solidifies that you have an agreement with that particular debtor. Right?
Yeah.
You had it with the original person, but not with the person who has it now. So they buy the debt, and a lot of times they buy that debt. They only buy that debt for 4 cents on the dollar, but they want all the money that they can from you. Right?
Yeah.
So one of the main things that I've used for a lot of my clients, including myself, I think I'm going to have one collection back in the past, is that you ask them one question. Or you make a statement, I'm going to say, right? And the statement is that, if in fact you believe that I'm aware of this debt, please send me the certified letter with my signature on the bottom of it to show that I was aware of this debt prior to you putting it on my credit report. If not, please remove this off my credit report ASAP. Now, what does that do? It puts them in a position because now they're stuck. And what that happens is that this, right? You can't not put something on someone's credit report they're not aware of because they may have addressed it prior to you doing it. If they're not aware of it, you can't just throw it on there. So you have to make sure that they're aware of the debt that you said that they owe. And if they're not aware, then you just violated the Fair Credit Act. And that's one of the main things that they have to do and one of the things they struggle with. When you utilize that tactic, a lot of times debt collectors just walk away because they ain't really losing nothing anyway. And there's a lot of times they're not actually sending out any certified mail basically because certified mail is about $7 a letter. So you imagine doing that 300-400 letters. Right. And the odds of you getting the return on your money is very low. So that's how you get rid of any collections that come your way. Just ask them for the proper notification of information that show that you own the debt, that you knew about the debt, going into your credit report. And that's how you get it.
Yes, sir. Let's go.
What's up, people? It's Wanzo doing things the Wanzo way. I just finished the Famous and Wealthy podcast. Listen, I dropped down mad game, and if in fact you want to know some more about that information that I dropped down, you can follow me at @A_Wanzo on IG. In addition to that, you can go to thewanzoway.com, which is TheWanzoway.com, and tap in with me. Let's get on a call. Jump into the mentorship. Let me show you what I got for you. The mentorship is bomb. I charge about $15,000 to get you guys to the next level of the game, and I'm going to show you how to get over $300,000 with one acquiring your business on your credit report. So let's make it happen. Let's go. Let's do it the Wanzo way. Peace.